At CPP Investments, we invest the Canada Pension Plan Fund with the best interests of 20 million Canadian contributors and beneficiaries in mind. And in doing so, we work to invest the fund prudently across a diverse range of equities, bonds, and other investments around the world. We take the responsibility of estimating the fair value of the fund's investments very seriously, as this is one of the most important pieces of information that we use to manage the fund, with a view to achieving a maximum rate of return without undue risk of loss.
We use fair values to make key decisions about the fund, like asset allocation and risk management. Fair values are also used for the fund's audited financial statements. So it's crucial that we have reliable valuations, which is why we have developed robust processes to estimate the fair values of all of the fund's investments.
But what is fair value? Fair value is what a buyer would be willing to pay for an investment, and on the other side, the price a seller would be willing to accept for that asset. So how do we estimate fair value? Let's start with our valuation process for the fund's investments in public stocks, bonds, and other securities that are traded in active markets. These investments are valued using quoted prices from stock exchanges and other market data providers. We check the prices we receive from these sources every day to confirm that we have accurate information that has been correctly applied to the fund's holdings to determine fair value. For the fund's private investments that are not traded in active markets, such as private equity, real estate, and infrastructure assets, we estimate fair value by carrying out extensive analysis that uses several different types of information available to us.
Estimating the fair value of private assets is more complex because we're required to apply judgment. That's why we have implemented a prudent system of checks and balances. Let me summarize 3 key elements of that system. First, our valuation processes for private assets are based on leading global practices for asset managers. We use discounted cash flow analysis and other pricing models, and we consider any and all public information to estimate fair values. For example, we'll look at comparable public companies and recent transactions for similar assets. Second, we also use third-party appraisers and external valuation experts to provide independent views. Finally, the values we arrive at each quarter are reflected in our financial statements, which are subject to external review and audit.
The valuations of some of our investments are provided by our partners, such as for the fund's private equity fund and external portfolio management investment strategies. For these programs, we review our partners' valuation practices, often with on-site visits, to provide further evidence around the robustness of the estimates of fair value that they provide to us. Regardless of the investment type or market, our team is constantly advancing our valuation practices to advance our ability to consistently and reliably estimate the fair value of all CPP fund investments. This is all done against the backdrop of delivering on CPP Investments' mandate of maximizing returns without undue risk of loss for all CPP contributors and beneficiaries to help ensure Canada Pension Plan benefits are there for future generations.